My name is Kim Kellaway and I'm Head of Clients and Markets at HLB Man Judd, and I will be your moderator for today. We've got two panellists. We have Simon James, partner in our corporate advisory, and Mariana von Lucken, a partner in our tax consulting. The majority of our webinar today will be presented by Mariana, and she is going to go through JobKeeper and what's new. She'll also run through some alternate testing as well for you. And then we will have Q&A at the end of Mariana's presentation. I do have a number of questions that you have sent through as well. So I've got those and we'll be prepared to answer those. So I think we should get started. So I'll hand it over to you, Mariana. Thank you.
Maz, you're on mute. Maz, you're on mute.
Thank you. Anyway, all I said was thank you and thank you for joining us. So I didn't miss anything exciting. Yeah, so we've got another week of seminars, and really, the more I listen to this JobKeeper, the more I sometimes get confused. So quite interesting. And that is mainly when you're looking at the projection. So what I tried to do in this slide here is, a lot of you have already heard quite a bit about JobKeeper, so I didn't want to repeat all the same things. But mainly the things in black here are things that we already know, and the things in white are probably highlighted there because they're new or just recent developments. So eligible employer. The main things you have to have: eligible employer, eligible employees, then you can enroll. And we know enrollment's open, and we know that the enrollment's open to the 31st of May. Now, when they announced that, I was a bit confused because the payment still had to be done, the top-up had to be done by the 30th of April. So it didn't quite make sense to me. But then a day later, they brought out an extension to pay the top-up to the 8th of May. And why do I say that? I say that because in most cases, practically, an employer is trying to work out eligibility. They may have not been eligible in March. They may not have been, they're on the border in April. So borderline, so depending on what the revenue is going to be, to test actual, because that's the safest, right? And in order to, we're on the 30th today, so it's the end of the month. Is there enough time to then go and do an enrollment and get all the notifications and etc. and make the top-up payment? So that's why I was very happy when that came out, that we have now to the 8th of May. So in a couple of days, people can look at their April turnover and then compare it to last year April turnover and then work out if they're eligible for April. And we have time to make the top-up and we have time to do the enrollment. I wouldn't wait till the 31st of May to do the enrollment. I'd do it at the same time as either, if you've not already done it, I'd do it before the 8th of May. And I still think if you get it done before the 8th of May, and the earlier the better, is you'll still get the payment in May for April. If you make enrollment in 31st of May, when would that happen? I think that would happen maybe more for a sole trader than anything else. And why I say a sole trader, because they don't have to make a top-up payment. Then that would make sense. They've got more time, which is nobody here in this call. Okay, so going back to eligibility, what I was talking about was the main thing there is decline in turnover. So decline in either actual turnover or projected turnover. And when you're doing it, you can project April to June. But as I talk to people, I think it's very hard to project, and especially as a not-for-profit. You can't project a bequeathment. That's fine. If you end up projecting and you get a bequeathment, again, I think you can justify it. And I don't necessarily think you have to pay back the JobKeeper. But I think just as a conservative approach, I would always approach the ATO if that were to happen and chat to them, have a talk to them. So hence why a lot of people want to use actual figures. And then, so we've got that now, we've worked out that you're an ACNC, you have 15%, unless you're in university or a school, which are excluded, meaning you have to use the 30% turnover test. And it's 15% or more. So if you come on the border of 15.5, you're fine. And now what's come out and what I want to talk about in the slides going forward is the alternative test. When do you use the alternative test? You don't use it because you didn't meet the basic test. You use the alternative test because you've had something change in your business. And the ones I think that will be most relevant to some of you here will be the not-for-profit wasn't in existence in 1 March 2000. There was no comparative period. So maybe it came into existence in May or something like that. So that turnover test might be useful for someone, for an entity that hasn't started up in the last 12 months. Another one might be there might have been a restructure. Maybe, maybe not. So that's another one that I'm going to talk about. And also businesses where you've had a substantial increase in turnover. So substantial increase in turnover. So when, is that going to happen? So maybe I've got a new business within the business I already had, a new product. We've branched out a bit more, it's increased. So there's a possibility for the alternate test. Because if you were to compare current to last year, you've got an increase, so there's no way you're going to meet that test. Or if you have irregular turnover. And irregular turnover is that you're not seasonal, but it's irregular. Something happened in that year that you received it. Is a bequeathment irregular? Is a grant irregular? So, there's questions there I still have on these topics. And they don't answer them, by the way. all they do answer is that grants can be excluded from your calculations. You can choose to include or exclude. And I'll come into that in a bit more. So hence, if you meet the basic test, you do not have to retest in the alternate test, okay? So don't feel like you've done the basic test, you meet it. If you meet it, don't retest. If you've got everything right, keep going, leave it alone, move on. The alternate test is really there more for something that you couldn't meet in the first one. Now somebody's playing with my slides. Okay, and then the other thing is you're paying the $1,500 per fortnight. I've already mentioned this extension to the 8th of May. Then we go down to eligible employees. Nothing really much has changed there. You have to be employed as of 1 March. Somebody asked me a question in one of the questions before this session about whether someone's coming on maternity leave after that date. Well, unless they were employed with the organisation on 1 March and they just took over a position, I would say that any new people that start after 1 March would not be eligible for JobKeeper. They would just not be eligible employees. You wouldn't have to top them up. What they also clarified in a media release on the 24th of this month was that Josh Freiberg released that full-time students who are 17 years and younger, that's what I always say, I'm 50 and younger, and who are not financially independent, so they're not independent, are ineligible for the JobKeeper on a prospective basis. So I don't know if you've got any of those, but happy to chat with you. So again, if you've passed, you can enrol, and that was extended to 31 May. Oh yes, we've changed that, good, thank you. Another thing to be careful of, you've enrolled, you've paid, for those that have, you've done your nominations. The next thing is that you have to look at your single touch payroll. Or how are you paying your staff? Everyone usually has single touch payroll because that came in. The only times you wouldn't was maybe a mum and dad owners, they might not have single touch payroll, but we don't have that scenario here. So everyone should have single touch payroll. The other question becomes, has it been upgraded for JobKeeper or not? The functionality. If it has been and you've enrolled, then you have to select the employees that are going to be eligible. Now it has 2 dates on there because there's 2 fortnights. But basically, if you're in, they're all in, and it's in the first fortnight. So the 30th of March to 13th of April. You can't pick and choose who employees are in. And again, in that media release, they said all in, one in, all in. And there'll be more information coming out on that. So we know we will have more to come to clarify that point. A scenario which I was given with this one in, all in, which I thought was good, was I've got 30 employees. I'm not getting any income right now in April. I can only pay 15. That's all the cash I've got. I can't get a bank loan. Now, it's not, the tax office sounds like it's on tap, but they're supposedly, I think, consulting with the banks and having a JobKeeper hotline for the banks. So when I spoke to our debt advisory, that wasn't in place a couple of days ago. Unless they've given us the extension and they're putting something in place, that still needs to be seen. Yeah, so they had 30 employees, 15 could be paid. Can they choose to just pay 15? And then get the JobKeeper for those 15, and then pay all of them in May? And the answer is no. One in, all in. So if you qualify, you're all in, and you have to pay them. So you just got to find the money. And that's the thing that's interesting. Next slide, please, Kim. So I didn't mention there, if you're not on single touch payroll, that's okay. Sorry, if you are on single touch payroll, but you haven't got JobKeeper functionality, which you're probably asking yourself, you probably don't have it, or you do, most do, is you can actually update the business portal, and they'll upload a single touch payroll list of employees, and you can select them that way. That'll be available in the portal from the 4th of May. So not available right now. So basic test, as we've discussed that to death. I still have probably some questions about if you compare month to month, what does that mean? There's some questions about whether I had a grant in 2019 in March, I didn't get it in March 2020. You know, is it a comparable month? I had that question. Haven't got an answer for you right now, concrete. The other thing is I've got the grant in February 2019, or vice versa, but I got it in March 2020. So when I compare month to month, I've got a higher increase. Again, haven't got an answer. Maybe you can't meet the basic test and you have to look at the alternative test. But I'm still inquiring about that one. But that is a hot one. And obviously with a lot of organisations, you have a lot of grants. And the government has said, you know, you can exclude your government grants, but in most cases, I know when I've spoken to not-for-profits, that may not work well for them. That may not actually give them what they want for the result. So the alternative test period for new businesses. So if it's a new business, there is a business test there in January 2020, or those that had significant acquisitions in the year. And okay, that's probably an old slide, but that's all right. We'll go to the next slide in a minute. So what's your projected turnover? As we indicated, we've always understood it to be our taxable supplies, our GST-free supplies, and supplies between members of a GST group. So with the exception for not-for-profits, ACNC registered, except schools and universities, we include donations, and bequests are considered donations. So I got that confirmed from the ATO. And we exclude input tax supplies. So what's interesting, obviously, in your BAS as a not-for-profit, you wouldn't include normally donations in there anywhere because they're not a supply normally. But there's just this one little tweaky thing for not-for-profits. Another thing that we had confirmation from is that the NDIS advance payments are not considered taxable supplies either, whereas an NDIS grant, or money coming in, I should say, that's not an advance payment, is usually just considered grant. So it would be included in your taxable supply calculation. If I go to the next slide. So this is the interesting one. So when the commissioner says he's got his discretions, you can't go in and give your scenario and say, can I get a discretion for my turnover test? No, you have to, he only gives discretions for entities. So in these types of scenarios, he'll use his discretion. And if you meet the criteria, you can use that alternative test. But again, you only use this if you don't meet the basic. If you've got a comparative period, you won't be allowed to use the alternative unless you fall into one of maybe irregular turnover, as I mentioned before, or you've had a substantial increase in your turnover. And that'll come out through the numbers anyway, if it's true or not. So commenced business. So as we talked about, the entity commenced before 1 March and after the comparison period. So again, it's very easy calculation. It's just fiddly doing it. Is say, for example, you're looking at March period, you look at all the months beforehand, you add them up and divide it by those amounts. So if you had 6 months of going in business before March, you add it all up, what your revenue was, divide it by 6, get a monthly, so get an average for the 6 months and compare that to your March period. Are you over and under? 15%. That's what you're looking at. Hard to visualize, I know, but I'll go through these a bit quicker. I think it's more about, do you have these type of scenarios you've got to think about, and then we can work out the calculations afterwards. Acquisition disposal. Did you acquire a business or dispose a business? Because what they say is in the 12-month period. Because if that's the case, then you basically can compare the month after the acquisition to your test period, which is March or April, or the quarter. Remember, those are the 3 different options at the beginning. There's more options after that. You restructured your business. So within your organisation, you had 3 or 4 entities. You might have merged 2 entities together. Gives you a totally different result. Did you have that scenario? Again, it looks at after the change, the restructure happened. So you look at the month straight after. What does that look like? And use that to compare to the month that you're comparing to your test period. So instead of 12 months, so you don't look at March to March, you look at March 2020 to whatever the restructure happened in November, you look at December. So look at the month after. A substantial increase in turnover. Well, this one's really complicated. I don't know. I love it. But the ATO has confirmed that what they do is they look at your turnover today and your turnover 12 months ago, but not the whole year, just that month. So March to March, you compare March to March. Did you have a 50% increase? Tick. You move to the second criteria. Then it looks at that March. You go 3 months before, take an average and compare that to your target date. So it's just an interesting calculation. So this is where, you know, the substantial increase in turnover can happen with businesses that have substantially changed. So if a not-for-profit has done a lot more, it'll come out in this wash. Is there a 50% increase, 25%, 12.5% compared to last year? But then you can say yes to that, but you might not meet the next criteria, which is in the prior 3 months, if it an average of the prior 3 months, has that, have you had a decrease in the current target month to those three average months, 15%. So I think that they're substantially, you can calculate those quite easily once you've got the numbers. It's always, the question is what do you include in there and what don't you? But when I think you're doing these ones, it's a little bit easier because you're getting a bigger period. Irregular turnover. Non-cyclical business has irregular turnover during a quarter. Now, I don't know if anybody's looked at the rules, but I have, and I tell you, there's not, it doesn't give you enormous amounts of what that's used for. When do you think you've got an irregular turnover? You could see it as being, sorry, I'm just grabbing my rules, that's why I'm fiddling around over here. You could see it as basically something that happened that you wouldn't normally. It's very irregular. So maybe I got a grant one year and I didn't get it the next year. Something unusual. So what it does test there, that's an interesting one. It looks at the year, it breaks it down into quarters, and then it says, I look at the lowest revenue quarter and the highest. So, you know, the amounts, if you like. And then what I do is I compare it and I said, have I had a 50% difference? And if I have, I've got irregular turnover. And then it goes through a process of how I test it. So I can see this irregular turnover being used for some not-for-profits where they can't compare year to year, or month to month, I should say. Sole traders and small this is not really relevant for anyone here, so I won't go through it. And drought and natural disaster. So this, they had an example, because you may have some organisations have been directly affected by drought and national disaster. So you have to be in one of those disaster zones. So it's quite specific. But effectively what they're saying is you skip a year. So you look at this year, March 2020, and instead of going back to March 2019, you might go to March 2018. So it gives you ways with all these comparatives, if there's a drought, you'd go back to a normal period. So that's sort of the big way they work. So if I keep going, Kim, I think the big one that we're all been waiting for is this test for service entities. I know a lot of not-for-profits, they do have service entities. They might have different companies or entities within the organisation. They have one service entity. So the rules are going to come out on that, but the way they're envisaging it to work is they'll look at the revenue of the service entity. And those of you who are not too familiar, so you've got all your employees in the service entity, and then you manage your you charge a management fee to your operating entities. So you might have one or two, you might have one, and then you basically reimbursed your costs plus a percentage. So it's unlikely you're going to have a drop of 15 or 30% unless you're probably making a lot of people redundant, which is normally not the case. But what they're saying is you'll take the service entity and the operating entities connected to that service entity. So if I've got 4 entities and only 3 other servicing that service entity, I'm using the employees of that service entity, you take those 3, the turnover of those 3, plus the service entity, and you compare that to the prior period. So that's quite, so same, it just treats it more as a group instead, which is a bit different because normally you take each employer. Now this one that came out, again, these things here, why I put them on a separate slide is because we haven't had the rules on this yet. So it does say specifically in the media release, and it does say in the fact sheet question and answer in the Treasury fact sheet, question and answer, that there's more information to come. Okay, so that's very important because I think there is more information to come as well. So it says here, registered charities elect to exclude government revenue from the turnover test. So if you exclude it for 1 year, you exclude it for the prior year as well. What is government revenue? Anything that comes from a government department. NDIS payments, I think, is government revenue, but I could be wrong. It does come from they call it a special agency, but effectively, and that is basically, some people, I've read somewhere where government revenue is gifts. I wouldn't call it a gift because you have to do something for it. So you're not getting money that you go and do whatever you want with. You have to actually use it in a specific way. So somebody has asked me, is a government grant a donation? And I said, no, it's not a donation. You have to do specifically, you have to meet certain milestones to get that. Most organisations, I think, are including them in their calculations, because that's where the difference sometimes lies. JobKeeper payments to be made to eligible registered charity. Okay, so religious institutions in the past, I did get a question on this. I can't remember who it was, Kim, but they asked whether they're basically the non-employee religious practitioner could get the JobKeeper, and we weren't sure about that. But they've come back saying you can be eligible. And that's not just for one religious practitioner. I think it's all religious practitioners, but we'll get more information on that. So they can apply. So you've got to be registered as a religious institution, and you would know that under the ACNC. What do they call it what do they normally get? It's not called wages, it's called something else. I can't remember the name now.
Stipend.
Yes, thank you, stipend.
Yeah, and that was that pastor that had that small community of people. So there was a number of pastors, and some of them were volunteering as well.
Right, okay, thank you. And it's also deeming that the endorsed overseas, these are the overseas aid organisations, will meet the criteria as a not-for-profit entities that they pursue their objectives principally in Australia. So we'll get more information on that. And this is more for the universities when they're looking at their turnover test to get the 30%, is including core Commonwealth Government financial assistance. They should be including that in their turnover test. So just going to the last slide that I have, and then we can go to questions. We're helping some organisations work out their eligibility, so happy to do that. Assistance with the turnover test, I think that's usually the harder one. And completion and submission of forms. So the deadline dates, as I said here, it's 30th of April, but that's been extended. You can choose your eligible employees, that's been extended as well. Your employee nominations, remember that is self-assessment, so it's a matter of having them on your records. And my slide's gone. There it is, it's back again. And then, as you know, as we discussed, on a monthly basis, at the end of each month, 7 days, we'll have to report via the business portal. The form hasn't come out yet, so you won't have it available. You'll have to report what your revenue was for the month before and what your projected revenue is going to be for that month. for the month of May, for example. Now, again, it's not a retest. It is simply information gathering to see how the economy fared from the COVID-19 and what the effects were to business. That's what, hence what the ATO is saying. Who knows what they're really going to use that information for. Big Brother is gathering data. But it's a requirement that we have to do in order to get the JobKeeper, by the way. Now, I know some of you on the call are already getting assistance, so this question is more probably for those that are on the call, if they have thought about whether they need assistance. I think the biggest thing is working on what is your turnover. It sounds like an easy question, but maybe because I've seen so many different ways that can be construed, that I say that it's not so easy an answer. So if you need some assistance, please let me know and we can have a chat. Probably go to answering some of the questions when Kim...
I'm just running that poll for you, Maz.
Yeah, thank you. So when Kim's ready.
Yeah.
I'll get the questions out. I've
Okay.
put them somewhere.
Okay, I'll end that poll there.
Thank you.
Thank you.
So some of the questions, I've got, I know.
Sorry, I'm going back. Yeah.
Some of the questions was, no, I've lost them. There we go.
I've got a couple in chat, Mariana, so do you mind if I'll just take those, give you those ones first?
Sure.
And then we can go to the normal Q&A. So one in, all in, what if you miss the deadline in topping up an employee to $1,500?
Well, the good news is you haven't missed the deadline because you've got till 8th of May. It's an interesting question, isn't it? Because say you just accidentally forgot to top them up, you do have till the 8th of May to do that now. But they're saying you probably wouldn't be entitled to it. If you're not topping up all your eligible employees, one in, all in, you wouldn't be entitled. Now, more information is to come out on that. So let's have a look when it comes out and we'll notify everyone here when that does come out.
Okay,
whether
excellent.
through one of these webinars.
Yep. This may just be a statement. A government grant may be for specified purposes and then need to be acquitted at the end.
Yeah, that's right. You've got to use it in some way. You've got to have milestones. So hence why I say a government grant is not a donation. People have asked me that question and, you know, I don't think it's a donation at all. So that's correct.
Okay.
You may have to give the money back if you don't use it all.
Is superannuation to added on for the JobKeeper $1,500 payment? Also, is this payment included for our annual workers' compensation calculations with iCare?
Good question. Probably that second part I'm not 100% sure on. I'm not sure if they've even advertised anything about that. So with regarding to the super, is it added on to JobKeeper? It depends. So if you already pay your employees 1,500 ordinary wages, so they're already getting 3,000 in a month, then you just pay them the normal 9.5%. If your employee is getting nothing, so you've stood someone down and you have to top them up, so this is what the top up would be identified in the single touch payroll, is that it'll be 1,500 a fortnight or 3,000 for the month. You'll have that showing as the top up, and you don't have to pay super. You can choose to pay super, but you don't have to. So the top up, there's no requirement to pay super. So another scenario, I pay someone $1,000 a fortnight. I have to top it up by 500. There's no requirement to pay super on the 500. That is an employer's choice, but you do have to pay it on the 1,000 because that's ordinary wages. So hence why I think the single touch payroll has it separated so you can identify it from a super perspective.
We are a monthly pay provider, making sure that April gross pay per employee is at least 3,000. Our payroll provider has asked us how we are allocating top-up payments between JobKeeper fortnight 1 and 2. How should this be allocated given that the dates of the JobKeeper fortnight do not align to our pay cycle? For example, commencement date of 30 March versus the pay period which starts 1 April, then fortnight 2 ends on the 26th of April, and then versus pay period ends 30 April.
Yeah, it's interesting because I've had that similar question. Might be same organisation, but a different person. But effectively, the ATO has said that, you know, you might not have, you might have less payment cycles or more payment cycles. So you might be paying weekly or you might be paying monthly. So what they've said is as long as you've paid, so they want you to have paid by the end of the second fortnight usually. But if you haven't, they're allowing you to extend that. So for this, it's a transitional measure for the April period, is they want you to have it paid by the end of April, or in this case, 8th of May. So even though they do say what fortnight, and your payroll provider might be asking that question, effectively you'll tell them that if it's the top up, you'll have to tell them which fortnight relates to. You might just relate to one or the other. But when you're doing your pay run, it'll just be either monthly or weekly. Now that one's interesting because you've got 3 payments made in the month. So you've got one, it just happens to fall on the 1st April. Again, it's an anomaly that happens. But the way you read the legislation, it says you've paid in a fortnight. So technically, if you look at it, you could say we only had to pay, and this is where you're not paying someone already $1,500, okay? So in that fortnight, you would have had to pay them $1,500. Have you paid them, in the fortnight you would have paid $1,500. In the week, you would have paid them $750 or something along those lines. It gets quite complicated, I think, because you've got 3 payments there. But at the end of the month, if you look at it, you would have paid them $1,500. You would have paid them $3,000. That's what you need to look at, and you're in.
Okay,
and then
in
your next month, you need to look at the same.
Yep. This is interesting. If some employees choose not to sign the employee nomination declaration, are they still eligible for JobKeeper?
Well, you don't have to sign the form, but what you have to is notify. So the form actually indicates, are you getting the job? Wait, one is you might not be eligible. That's why the nomination says you're not eligible, so you're not in. The other might be the case where you're, what was the other case? So sorry, I just slipped my mind.
Haven't we seen where an employer was actually working part-time with one employer, part-time with another, and then they had the choice?
Yeah, so it might be that they've elected another employer. They've nominated another employer to actually be their main employer. So the form tells you that. So that's why you need the form to prove why you're not paying that employee. Now, if that form comes back and they're in, they can't elect to be out. And why would they elect to be out? I just don't know what the logic would be, unless they're doing it with another employer, unless they're doing something else in the sense of a business participation. But normally they wouldn't be able to get business participation if they're getting salary and wages. You can't get both. So it'd be interesting to understand why they've opted out. Because an employer they would effectively be in, because under that one in, all in. They're all in unless they're ineligible or they've chosen another employer. I mean, that may not answer your question, but that's the only answer I've got at the moment.
Okay. If turnover does not have 15% decrease in April nor in May, but due to a big fall in June, the April to June quarter has an over 15% decline. Is the employer eligible? And if yes, does the employer didn't pay top up for the employee in April?
Okay, so 2 things there. So you look at either in the legislation, it says the basic test, you either meet it in a month or a quarter. Your quarter is April to June. So you do your projections. You might have your actual for April because we're at the end of April, and then your projections for May, June. And then you're comparing that with last year. If you had a drop of 15% and that's what you projected, that's fine. You're in for April. you've got up to the 8th of May to make the payment. But for some reason you didn't make it on the 8th, you would probably be in but not entitled for the payment in April itself. But you'd likely be in for May, and you could get the payment there. But again, we have enough time to top it up. You've made your projections. You've got till the 8th of May. So you've got time to work that out.
So the participants actually extended the question in terms of, so if the employer only finds out it is eligible in July, but didn't pay the top up to the employee in April, May or June.
Oh, right, okay.
Is it okay to pay top ups on 1 July to claim the quarterly JobKeeper?
Yeah, I mean, you effectively didn't project that you were going to meet the turnover test. So you didn't know. So for example, if you in June, you projected that you were going to meet it in June itself, but you couldn't project the quarter. So you hadn't done it back in April. So effectively you're enrolling for June onwards. And when do you have to enroll and when do you have to pay the top-up tax? Usually by the second quarter. So that'd be nearly to, I don't know the exact date, but towards the end of June, you would have had to pay the top-up tax and enrolled in that second fortnight, not quarter. In the second fortnight, you would have had to, in June, you would have had to enroll and pay the top-up tax to be eligible then for a payment in July for June. Okay, so they pay you 1 month in arrears. So if you look at every month and you just say you didn't meet March, you didn't meet April, you didn't meet the quarter, and you're testing in May, and you've decided at the beginning of May, you've done your projections, you're happy that you're in, by the second fortnight, you would have had to pay the top-up tax to all your employees and enrolled in order to get the money in the first week of June or up to the 14th of June for the month of May. Is that clear, I hope?
Yep, we'll see what we get. The next question's interesting because this person must not be ACNC registered because they're saying that their regular turnover has reduced by around 30%. So there's no issues there. But in April, they settled on the sale of a property. They don't normally sell properties, so it was irregular. So they're assuming this is irregular turnover.
There's something in the GST Act which excludes property sales. If it's not regular, you're not in construction. If you're in construction, yes, but you're not in construction. So a 30%, it might be because you might be ACNC registered, but you might be university or school. So hence why you've got 30%. So yes, the sale of property, you would exclude it.
Okay. Any thoughts on government subsidies for residential and home aged care services? Are these considered as government revenue? Or are we talking more of a fee for service type grants?
Yeah, I mean, that's what the NDIS is like a fee for service, isn't it? In a sense, you're getting it to do a program. Look, until there's more information coming on that, I don't have any specific. I mean, there is a thoughts about government subsidiaries for residential and home aged care. There is a website I had a look at that says government departments and agencies. So, you know, if I thought about it, I went there and NDIS is listed. So I wonder if these grants, these specific ones you're mentioning are listed, because that sort of indicates that that's a government department or agency. And therefore, I think it would come within these exclude or include rules. That's my logic. But until we have more information, I would just hold off doing your enrolment until we have that information. It should come in the next few days. They've been very quick. So within the week, usually they're bringing out the rules. So they brought that in on the 24th. What was the 24th? Was that was Friday last week. So I think we'd get it this Friday. So that's tomorrow.
Thank you. Mariana, for full-time permanent employees, do they really need a nomination form? Is it not assumed that they are only working at their at our workplace?
Yes, you do need it. It's just part of the law. So you need to get it. It's a self-assessment. You just need to keep it on your records, but you will need to get it. I wouldn't risk not getting it. Yeah, anyway, it's a very simple
visa status and things like that as well. It's not just employment; it's visa status as well.
It says here for full-time permanent employees. Where did you get visa status?
No, just in terms of permanent resident or Australian or not on a visa. That's one of the other things
Yeah.
that's signing off on the form.
Yeah, and then also that you haven't chosen, and I guess you're thinking because they haven't chosen another employer because they're working for you full time, so they couldn't have anything else, could they? I mean, they couldn't have a part-time job or a casual on the weekend at a restaurant that they've had for more than 12 months. They could. I don't think they're going to choose them to be their eligible employer, but you know, I think that's one in all in. They just want everyone to fill out the form.
Yeah. We paid $3,000 to casual employees who did not work at all in April. The payment was processed this week in one lot. There was discussion and disagreement if tax should be deducted, as if it was 2 by $1,500 pays or as 1 by $3,000.
Well, I mean, you know, PAYG withholding is based on what your salary is for the whole year, right? So it shouldn't make too much difference. Maybe I don't know what the difference will be, but effectively you do have withholding tax taken out. So whether you still got 3,000 in the month, whether you got it over 2 weeks or whether you got it in one lump sum, it's still the same month. If you look at it, it's more about what you were entitled to get for the whole year. So this staff member would have been on a salary potentially of say 60, 70,000. What would you have withheld normally on that salary? But the reality of it is it's less money, so less will be withheld. You wouldn't withhold at the top rate.
Okay. Regarding the cash bonus, we have received an amount already. Do we need to spend that on wages or as needed for any other business purpose in terms of recording?
Yeah, so the cash bonus is the cash boost is not accessible to taxpayers and they can use it any way they like. So when you get that in your integrated account, the ATO, and they've been giving those, it'll offset any PAYG. The idea is that it offsets any PAYG withholding liability. But if you've been paying it monthly, you would have paid January, you would have paid February. So the only thing it's really helping you because you get the March amount, you times it by 3, and they give you 3 times what your liability for March is. So you've got an extra amount sitting there. They'll offset it against any GST liability. And if you've still got an extra amount, then they'll refund you. Or they'll offset against any other tax liability you have. But assuming they've refunded it to you, you can do anything you like with it. The idea was to help you with your business. And it's not accessible and it doesn't go into your JobKeeper projections either.
So do they need to record a separate line item in revenue for JobKeeper and Cash Boost?
I mean, most not-for-profits don't pay tax, so the JobKeeper is accessible for most employers. I think it's just good practice to separate it in your P&L. I think Aidan mentioned before you just put it in as income in the P&L. So I would just separate it and say Cash Boost, and then I would separate the JobKeeper and put that as a separate line. So I mean, you don't see any difference. Again, I think it's more for reporting purposes than anything else, and it's probably not a bad thing to have. But again, you're not paying tax, so there's no requirement. And even if you were paying tax, you might put it in your accounts to show that you've got the money, but we would take it out when we're doing the tax return.
Okay.
Adjust it.
Now, this question is to seek clarification. If an employer didn't project, but only finds out over 15% fall of quarterly turnover of April to June on the 1st of July, it can only claim JobKeeper onwards starting from July, but not for the past 3 months of April to June. Therefore, it missed 3 months of JobKeeper.
Yeah. So maybe the question's maybe not written right in what I'm understanding, and not that you haven't written it correctly, that's your understanding. So when you say it only finds out over 15% fall of a quarter turnover April to June, well, the reality of it is you're projecting today for April, May, June. Well, April you have the figures. So today when you're enrolling, I'll give you 2 different scenarios. Today you're enrolling and you've projected for April, May, June. So you would get the JobKeeper for April, May, June. You have to make the top up, do all those things right. Now the next question becomes, what happens as you're getting closer to the end of June or the end of June, and you find that your projections, you erred in your projections, and you're not 15%, but you're 13%. Are you entitled to the JobKeeper? Well, the ATO has answered some questions, and it's in their ATO website, is saying that you would still, it doesn't mean you're not entitled to it, you're still entitled to it. So you would have been paid April, May, June. All you have to do is be able to support how you made your projections. So a not-for-profit could have projected that their turnover was going to be less than 15% for that quarter, but they got a bequeathment at the last minute, or a massive donation they didn't expect. Now, if they've been getting regular donors every year and they've included that in their projections, how could they count a bequeathment? So then I think, again, they'd be fine to get the JobKeeper for the whole 6 months, so long as they support, you know, why they were out from their calculations. Might be different if you're a for-profit and you've really done your calculations wrong, but a not-for-profit, you can see how some situations you would have something come through that you did not expect at all, and you can show that. Because bequeathment, unless you knew the will was all settled and you're going to get the money, that would be the only time when you'd know that you're going to get it. Donations, you can actually go back to your donors unless you've got millions of it. You can kind of project what the donations people are doing. There might be some sort of statistics that you can do internally to sort of see what the feel is. And you can already see if people are backing out of donations. But your big donors are the things that are going to make the difference. You can contact them, maybe have a chat with them and see, you know, making the donation the last 2 years, would be looking at doing it this year. I don't know if that's acceptable for a not-for-profit to do that or not. But give you a different scenario. Say, for example, you didn't project the quarter, but in your question, what you're really saying is that you didn't meet the criteria until June. And then that's when you enroll, and you make sure you enroll in that month. So before the second fortnight of that month, of say June, you've paid your employees the top-up tax, and you're eligible for the top-up tax from that period onwards. So you'll only get June onwards. So wherever you're eligible, wherever you meet the criteria or you make your projections that you meet your criteria, you're eligible. So the main thing to think about is that the 30th of March is a start date, and you're eligible for the 13 fortnights if you can show that you meet it in March, April, or that quarter, April to June. If you don't meet any of those and you can't show your projections, then you go to May and look at May. Did you meet the criteria in May? Compare it to last May. Look at what it's made up of income-wise. Have you got comparable periods? Have you got comparable income, as in type of income? And then go from there. And then you would be entitled from May onwards, as long as you do your top-up tax. So you've only missed 2 fortnight payments. So you've only missed 3,000, but you're still entitled to the rest for the next, because once you're in for the whole 6 months or 5 months or 4 months, depending when you enroll. So I hope that's fairly clear now.
Okay. The majority of the questions that were submitted prior to the webinar, it seems that you've dealt with most of them, except this one. If a person has started in a role to cover a worker on maternity leave, but did not start till April, would they fall into JobKeeper?
Well, they have to be employees from 1 March. So unless they've already employed with your organisation in a different role, and they're going to be doing that role in 1 April, that's fine. But if they're not employed with your organisation 1 March, and they're going to start with your organisation in April, they're not eligible. So they're not in. So the ineligible employees, so you wouldn't be paying them JobKeeper, no. They wouldn't qualify, unfortunately.
Okay. And the participant that had all those numerous questions, they've just said, thank you so much, that they're understanding it now.
Great, thank you.
Okay. We might just run that poll again, just in terms of needing assistance, now that you've gone through the questions, Mariana. I might just run that poll quickly. I'll relaunch it now for you.
Yeah, and look, I know some people on the call, I am already helping them. So if you do say yes, I'm already talking to you, so I won't ignore you, but.
Yeah, okay. Yeah, we've got more participants coming through that poll now. Okay, I've just ended that poll for you. We've got one more question. Nope, no, it's been answered. Okay. Would you like to go to the next slide, Mariana?
Yeah, sure. Thank you.
There we go.
Thank you. So, look, I've been talking to a lot of our clients and non-clients, and I'm happy to chat with them. And we've been talking, and I don't charge them for chatting. It's more really when we're doing a bit more work for them. So where we're reconfirming something with the ATO for them, when we're looking at their calculations, that's when, you know, I do say up front that we would charge a fee, and we negotiate that up front. So I'm just being very transparent. I know it's difficult times, but at the time I think we're doing a lot of pro bono as well. We're giving all our time as much as we can, but where we have to spend specifically more time and get our staff involved, then we will be feeing. So I hope no one minds and doesn't take that the wrong way. So if anybody does want to take up that offer, please, this specific poll is asking that question. So, you know, we'd be ringing you to sort of say, would you like us to go through that, and let's discuss what that involves.
I'm just running that for you now.
Thanks, Kim. I think these projected turnovers are very tricky. I think what for not-for-profits trickier than most. I've had some feedback from the ATO that I wasn't really happy with, so I'm trying to recheck it. So before I announce it on our webinars, I really want to make sure that I'm not going to say something that doesn't make sense. So I'll come back, and if we hold another webinar, do we intend to hold another webinar next week, Kim?
At this point in time, I'm not sure, Mariana. I suppose it depends really on whether we've got any more updates, or you actually get correspondence back from the ATO that you think that we should be communicating. So we'll just see how we go with that one.
Yeah, sure. Because I think the service entity, I mean, the media release information, there should be some rules that come out on that. I don't know how they're going to come out, whether they're going to come out as more just fact sheets, or whether, I certainly think the service entity one will come out as a legislative instrument. But I don't know about the rest of the items on that. If you go back a few slides.
Sorry, I'm just...
I don't know if you can move it with the when you're doing the poll. Yep, that's right. If you go back one more.
One more?
One or two more maybe.
Sorry, I'm trying my best to go back.
That one there. So sorry, go forward. You had it a minute ago. Anyway, the one with the blue, that's the one that I think that one we want to see a bit more information on. So some of you here will be interested in that. Okay.
Mariana, I think it's fair to say in 12, 18, 24 months time, the tax office is going to come back and kind of do lots of audits over all of this. So if you are doing stuff yourself, just make sure you document your thought process, especially around projected turnovers, and make sure you've got a robust file that you can pull out of the drawer at some point when the tax office comes and asks some questions.
Yeah, because one thing I'm concerned about is the legislation says comparative period, which is March to March, but they're sort of thinking comparative income as well, and that don't really think that, doesn't necessarily say that in the legislation. So that's just an ATO officer's interpretation, and they give you some link to the fact sheet, but it's not really, to me, that clear. So that's the things I want to, you know, where I think, well, would anybody have thought that? Because if I put it in my March 2019 BAS and I don't have it in my March 2020 BAS, a specific item, say a grant, does that mean I'm down by 15%, but have I got a comparative because I didn't get that grant this year? And what if I didn't get it in, I got the same grant, but I didn't get it in March. I got it in February. You know, do I have to do the alternate test? So these are the kind of things that aren't 100% clear. And because there's so much writing on it, you need to have clarity. If nothing else, you need to have documented your reasoning and thoughts.
I've got one quick question before we sign off. So they're seeking clarification. So just to confirm that the position of an existing employee who is paid over $1,500 per fortnight, who will be on maternity leave from June onwards, will we need to pay her the JobKeeper amount, or will it be adjusted in our payroll system and they use micropay?
Yeah, so so if you're in JobKeeper from April, should be eligible now in April. But what's going to happen is that because it's paid maternity leave by the government, I assume, so the government will be paying it. You can't be on maternity leave in JobKeeper. But what probably I haven't mentioned really is that on a monthly or fortnightly basis, you'll be indicating through your payroll system if your employees are no longer eligible. So they might have gone on workers' comp, they might have gone on paternity leave, maternity leave, that's paid for, obviously, by the government, and then they might have been just disemployed, so they've left your employment. So there'll be an opportunity to put that into your STP to indicate what fortnight and what date they left specifically. So you pay them as normal, and you might pay them for that fortnight up to the time they left. So for example, if you pay monthly and they've only been there for the first fortnight, you would only pay $1,500, and you would make sure that you tick the box to say they're no longer eligible after this date. And so you would only get a $1,500 in the following, the month in arrears, you'd get only the $1,500 reimbursed by the government, and you would have only had to pay the $1,500. So the thing is, what you pay is what you get back, but you've got to be careful you don't pay it, but they're no longer eligible, because you won't get that back. So it's just, and that's all fixed up. It's quite easy. It's all on the single touch payroll. So once you do STP, now I don't know if your micropay, was it micropay? I don't know if they've upgraded for JobKeeper, but you can simply ask them. So I think it's very important to ask your payroll providers. Again, if they haven't got it and they're not going to get it, you can do it through the portal from the 4th of May.
So from that, Mass, so we've received some advice that if a new parent has completed their government paid parental leave period where they are ineligible and are now moving on to unpaid leave where they are eligible, are they obliged to first exhaust any accrued leave entitlements, such as annual leave, before getting paid top up? Or is this consistent with your understanding?
That seems like, to me, a fair trade. What is it? More of an employer legal issue than an accounting issue. And so I'm not a lawyer. I hate to ask the question, but the other thing is I know one thing is you can't force people to take leave. You can't force people to take annual leave. You can ask them, and you can put arrangements in place because of JobKeeper. But again, if they're already getting the minimum, so if they're on annual leave and they're already getting the minimum of $1,500 a fortnight, after they've come back and everything, and they're getting paid, then you don't have to top them up. It's only if they're not getting $1,500 a fortnight. So if they started for the whole month of, say, May, they've been on parental leave or something like that, and they're entitled from May onwards, then because they've been employees from 1 March, they meet all that criteria, then May onwards, they should be able to get the JobKeeper, or you should be able to get the JobKeeper. But if you're already topping them or you're already paying them, whether it's annual leave or whatever form, they're already getting money for $3,000, then you don't have to top them up anymore. They're not entitled to more. It's capped.
We might finalise it now because we've just gone a little bit over time. I'd really like to thank our panellists, Mariana and Simon. In terms of our recording today, it will be available together with the slides, and we will be sending those out to you and also uploading those onto the ENFP LinkedIn community. One thing I would like to say, though, in terms of our polling, where we have yes, no and unsure, for those that have said unsure, we're very happy to chat with you further about that, because there is so much that people are unsure of at this point in time. And so I think that ends our webinar for today. Thank you all again very much for participating. Mariana, Simon and myself are available for questions. So please don't hesitate to send us an email through. And we wish you a very nice day. Thank you so much, everyone.
Thank you.
See you. Bye-bye.
Bye. Bye. Talk soon.
Bye.